Drodzy Państwo, zapraszam Pana Adama Białego, CEO Fiat Republic, The Rise of Web 2.5, How to Bridge Banking and Crypto. Zapraszam serdecznie. Proszę bardzo, bilet.
Sprawdzę swój prompter tutaj. Działa. Witam Państwa bardzo serdecznie. Proszę Państwa, ja jestem Polakiem, tak jak pewnie słychać. Natomiast zrobiłem prezentację po angielsku. Wydaje mi się, że będzie miała troszeczkę większy impact. Trochę mi to lepiej leży też. Także mam nadzieję, że Państwo się nie obrażą. Switching to English. So, hello everybody. I'm Adam Biały. I'm the founder and CEO of Fiat Republic. And I'm going to be talking a bit about crypto and banking today. And this new thing that we came up with, which is web 2.5, right? So the intersection in between web 2 and web 3. A bit about me first, before I start. I've got 14 years of experience working on payments companies, fintech companies, banks as well. I come from here originally. I spent 4 years at Raiffeisen Bank Polska when it was still Raiffeisen Bank. It then obviously got bought by Eurobank, and then afterwards became BNP Paribas. I moved to the UK in 2012, where I joined a couple of fintech startups. One of them was Ucash, an alternative payments ecosystem. After Ucash, spent 3 years at Sainsbury's, which is the UK's second biggest retailer. It gave me a very interesting perspective back on payments, looking back, at banking and fintech from the retailer's vantage point. It was a very useful experience. And then finally, from 2019, I've been engaged in what is called now the banking as a service industry. Okay, I was the chief product officer at OpenPaid. Most of my career I spent in product and technology. I was always trying to mix it with business and commercial as much as I could. So let's talk about crypto a little bit. Right now, this is previous year's data, 1.1 trillion annual fiat to crypto volume. Fiat means traditional banking into crypto. That is how much is going into crypto right now. It's probably even more now, given the developments in Ukraine, the war, which is really, really sad for me, watching it from that perspective. But crypto is being used as a way to help. So, that can only mean that it will grow over time. You have a number of users here on the screen as well, 221 million crypto users. This is a sizable population already. This represents 400% increase if you look just year on year. And yet, we have a massive growing industry, and the banking industry that this new industry is reliant on doesn't really talk or speak in the same language, right? There's a bit of friction. There's translation issues, as we call them. I've just pulled a couple of headlines from the UK press. Some of them are older than others, but I think everyone heard Barclays dropping Coinbase in 2019. Coinbase was seen this, golden boy of crypto, the main cryptocurrency exchange that was actually trying to do things by the book, and yet Barclays decided to let them go. What that meant, if you were a customer of Coinbase at the time and you were in the UK, you lost the ability to invest for a good 6 weeks until they found a new bank. I'm sure everyone also heard about Binance. They have a lot of notoriety. Okay, there was an incident where initially the Lithuanian regulator banned them. That triggered the UK regulator, the FCA, to have a look at them. And as a result, I think they're banned in 5 or 6 jurisdictions overall. Just they cannot conduct business. And there's a pattern why that happened as well, right? In the Times, this is a headline from UK press again. HSBC decided, we don't really know what's going on when our customers enter the world of crypto, so we'd rather just ban it completely, just shut it down. And that just started touching HSBC's millions of consumers in the UK. It's still in place. It's slightly more relaxed right now, but you know, it just shows you the sentiment, right? What is missing here in this dialogue? That you know, I would be willing to say that there's a lot of conflict, there's a lot of friction, but those two parties, those two worlds, banking and crypto, are starting to talk. But what is missing in that conversation? A common understanding of compliance. Like, what does it mean? AML, anti-money laundering, preventing terrorist financing, preventing bad stuff to happen with people's money, or money being used for bad causes. On the ground, if you look at the crypto platforms, I've mentioned Bitpanda and Coinbase here, but this is just an example. This is pretty much the same for any major crypto platform. When you transfer money from the world of fiat, so traditional finance, real cash, as we would call it, into the world of crypto, through using centralized crypto exchanges, the organizations that are at the center of those, you know, at the intersection of those two worlds, banking and crypto, this takes time, and it's really long, and it's clunky. I cannot top up my Coinbase account using the SEPA banking system in less than an hour. Right now, I need to wait between 1 to 3 business days. And as you know, the crypto markets are quite dynamic. They're fluid. They move fast. Okay, so if I'm waiting for my own money to be represented by Coinbase on their wallet for 3 days, I'm missing out on the market opportunity if I'm an investor, for example. Then the example from Bitpanda, and by the way, I love those two organizations. They're really doing a good job. And it's not really their fault that, that there's so many hurdles when it comes to processing fiat transactions. Bitpanda, you cannot make a payment using the banking system into Bitpanda to start trading without putting the unique reference ID. Now I can tell you what happens again on the ground. Most people put this ID in, and then Bitpanda is able to find their money on the ledger when it comes in. But 20% forget. Or companies like neobanks have this particular characteristic. They tend to overwrite that field with sent from Revolut, sent from Monzo. And then Bitpanda receives a payment from someone trying to match it with an account, a user account on their side. They cannot. So if you're that customer in that situation, you're waiting literally 2 weeks until your money is allocated to the proper wallet and you can start trading. Again, the reason for this is not because those two organizations are not doing a good job on the product side of things. The reason for this is lack of a sufficiently irrigated infrastructure to allow those fiat transactions to travel fast. So just a bit about the banks. The banks are trying to get into the crypto space. They're you know, probing the market, experimenting with different propositions. They want to be custodians. They want to be you know, to have wallets. They want to have an OTC service. They want to have their own exchanges. So we're seeing, you know, a lot of interest from the banking community. And yes, the volumes that I was showing you, $1.1 trillion is you know, is something that everyone wants a slice of, right? So let's talk about what is currently, just looking from a banker's perspective, what is currently standing in the way of banks offering services to crypto platforms. And I'm talking about transaction banking, okay? I'm talking about payments. I'm talking about just the traditional moving money from point A to point B. So unfit compliance processes, we all know this, right? It's really challenging when you're in crypto to understand, you know, which part of regulation you're supposed to be compliant with. And the banks, because they've been in this space for years, for tens of years or hundreds of years, some of them, they know exactly how to protect themselves, how to mitigate the risk. But they do not have or possess currently, haven't even defined them, compliance processes that are in tune with the super fast, super quick dynamic of the crypto industry. They lag behind because a lot of things are manual. A lot of the core banking systems are still sitting on the mainframe, okay? There's been efforts to move stuff to the cloud, but that is not helping. That is basically creating this bottleneck in the form of compliance on the bank side. Some banks just outright say, we don't do crypto, we don't want to do crypto, it's beyond our risk appetite, okay? And then that transfers to the entire group of those banks. Let's say, if it's a multinational, international bank, all of the constituent banks of that network are all of a sudden banning crypto. Insufficient data. There's a big sign here. The banks don't really know what's going on. When they're involved in a crypto transaction, fiat on-ramp and off-ramp, so converting traditional cash into Bitcoin or Ethereum and then back to traditional cash, they have no clue what's going on. They don't see any of it. They potentially maybe see the name of the person that is sending, maybe the bank account, maybe their address, but then they lose track of it. They don't see what's happening afterwards, right? So that's what I mean, insufficient data, because then going back to the compliance point, you can't monitor what people are doing with their money if you don't know, if you don't have any data. You cannot trace it, you cannot track it. That is the main sticking point, in our opinion, at Fiat Republic, of why the banks are still saying, no, I don't want to touch this. And then lack of crypto expertise. Now, this is the easiest one to solve. As you have those two worlds, I remember I was talking crypto and banking, two worlds that are at odds, or there's a lot of friction in between them. You need to do cross-pollination of talent, right? So crypto people come to banking, banking people go to crypto. That's how you bridge the gap of lack of crypto expertise. And then now let's change the perspective. Let's look at crypto platforms. So you have, if you're a global crypto platforms, you need to rely on multiple integrations to be able to do the basic stuff, right? Just accept GBP, so UK pound, euro, dollar tends to be the sort of currency of exchange with many crypto tokens. It's the source of liquidity. So even just those three currencies, that means at least two integrations with two banks. From a crypto perspective, that means two contracts, two compliance relationships, two commercial deals, right? And it's not just, from an operational standpoint, it's a massive overhead to manage multiple integrations. Tier 2 and 3 banking. I always say this story, and again, I won't be mentioning any names here because I respect some of those organizations massively. But what the current fear, the systemic fear that we have on the banking side of things towards crypto has created is a situation whereby the tier 2, tier 3, tier 4 banks that no one has heard of, that have tiny balance sheets, are taking the risk. Okay, taking the risk of Binance, taking the risk of Coinbase, although I would say Coinbase is a very mature organization. Taking the risk of the biggest crypto platforms, taking the plunge. And I'll give an example of one bank from Estonia. Okay, Estonia is a country of 1,600,000 people. That bank happens to be a retail bank. So you go to an ATM, you withdraw money. That bank has a brand on the ATM. The money that this bank is holding is coming from retail customer deposits, right? So lawyers, dentists, doctors putting money in. Imagine 20 billion dollars worth of volume per day from Binance sitting on that bank's ledger. Something goes wrong. Let's go, going back to one of those headlines, Binance gets banned, their assets are seized. We're literally talking about the doomsday scenario for Estonia as a country. This can make the country go bankrupt. I love the Estonians. I love that bank in particular. I'm not going to mention their name, but this is just an illustration of the tier ones, the biggest organizations in the world, need to start playing in this space, because otherwise the risk is too big for the global economy, the global financial services ecosystem. And then manual compliance processes. We already talked about some of this as well. So this is very much a systemic problem. A systemic problem needs nothing less than a systemic solution. So what do we want to do at Fiat Republic? We've intentionally replaced banking as a service. This is a term from 2019. Many people didn't even know what that means. I can explain. This is basically doing banking through an API, becoming an aggregator and offering banking services through one connection that is typically back-end, right? So a computer talks to a computer. There's no person involved here, right? That is the banking as a service industry. We're saying we're doing fiat as a service. Fiat is the word for traditional money, cash, and it's a jargon word in the crypto industry. That's how they call banking, anything to do with payments, anything to do with traditional currency. Fiat as a service. What we want to do is we are taking a three-pronged approach here. Okay, so from one perspective, we're aggregating banking connections, banking infrastructure by partnering with banks locally, but also globally. We put that into one API integration. So when Bitpanda, Coinbase, or any one of them comes to me for services, I say, hey, I have services from 6 or 7 banks that offer you those kind of currencies, and I'm doing this in a sustainable fashion. I'm not expecting those banks to debank me. There's a new word that is circulating in the crypto industry, debanking, so getting debanked. So that is the aggregation piece, let's say the pink element here. Compliance as a service, as I said previously, the language is broken, right? There's multiple expectations from the banking industry, from the regulatory community, which is putting expectations on the banking industry. None of that is understood by the crypto industry. So what we're going to do is we're going to add additional data into the ecosystem. Just a very quick example. Let's say someone transfers fiat in to Coinbase. Then from fiat, it goes to Bitcoin. Then let's say it's an investor, just a regular retail investor, is sending money to a cold storage. Okay, all of that is visible on the blockchain. But from if you don't have the context of the fiat transaction coming in, Polish zloty or pounds coming in, you don't know who this is. You just have a meaningless token coming through the blockchain, right? What we want to do is mix or merge the data from the banking community. So the name, address, what people do KYC on, date of birth, source of funds as well, right? Because some of those crypto transactions are quite big. They need to be the consumer needs to be checked for source of funds. We merge that with the data that is on blockchain because we're involved in the transaction. We can see that this is still that same person just moving money from one Bitcoin wallet to another. And then 9 times out of 10, if they're just a regular crypto investor, they're going to come back to Coinbase to sell their Bitcoin and withdraw the money. So this is an A to B to C money journey. Okay? We'll be able to give that audit trail, that transaction history to the banks because of our, let's say, position in between the crypto platforms and the banks that we partner with. And then to top it all, or tie it all together, is the consortium. So we believe also that crypto is currently lacking a voice when it comes to talking to regulators, to the banks. That's why we're trying to bring them together, band them into a group of interest, okay? And then adopt the stick and carrot approach. The carrot being, we get you more sustainable banking rails, more sustainable payments connections, more currencies, but you need to start harmonizing your compliance program across the industry. Not even you, Coinbase, or not even you, Bitpanda, but the collective. Because what happens right now is, let's say a Barclays is engaged by Kraken, and I'm not saying it happened. I'll deny if someone challenges me on that. But let's say they're engaged with, by Kraken, and Kraken says, I need this service, I need that service. Oh, and by the way, Coinbase is really bad. Then Coinbase goes to the same bank and says, oh, I need this service, I need that service, I need transaction banking. Oh, and by the way, Kraken is really bad. Then the bank in the middle is, okay, so everyone is bad. I don't really know what's happening here. So we need to harmonize those, as much as they compete. It's a very competitive process, like someone was saying previously on the panel. Very competitive industry. They need to be made a bit more predictable. Right? Because right now, this is this ball of energy, this chaotic energy that is really untamed. It's hard to stop it. It needs to be leveled. It needs to be standardized. There needs to be a uniform standard of compliance. And then what that means for both sides of the, let's say, equation here. So for the banks, you partner with someone like us. You get access to really clean, transparent, compliant crypto flows. You get visibility of something that you don't see right now. You get visibility of what is happening when money comes in, money goes into blockchain, money leaves the blockchain ecosystem. You also get the top platforms, because those are the ones who we targeting, because we believe by bringing them together, we will make a difference. So big flows, big volumes, sustainably, compliantly. On the crypto side, that means one integration to rule them all, as they say. It also means improvements in the compliance process. The standard of compliance that we'll be pushing and enforcing is going to be aligned with the banks that we're partnering with. It's going to be a common denominator of the banks that compliance standards that we work with. And then we have a specific crypto API proposition. I won't go into much detail here, but it is basically to solve problems that we see as consumers, trying to gain access to the market and participate. That is the proposition. Thank you so much. We are looking, I'm here as well, talking to local banking partners, Polish banks. If you are a bank, if you want to partner up, please reach out to me. We're looking forward to speaking with you. Thank you so much.